Hello everyone, my name is Tim Nyland and I'm the Director of Research here at Pacific Point Advisors. 2023 offered up many surprises. The economy turned out to be much stronger than most strategists and economists expected. Bond market volatility remained the highest since the global financial crisis. A regional banking crisis triggered a surge in liquidity that drove speculation into the mega-cap dominated consumer discretionary and information technology sectors of the S&P 500. This speculation drove 7 of the largest companies in the world, now known as the Magnificent Seven stocks, to govern the stock market, resulting in some of the largest disparities in sector performance and market capitalization classes we have seen since the global financial crisis. With all the bifurcation present in the stock market during 2023, we've suggested investors view the performance of 2023 as one side of a stretched pendulum trajectory in search of equilibrium, or dare I say, normalcy. On one side of the pendulum trajectory sits the Magnificent Seven stocks. This group of stocks you see on the screen comprises the bulk of the weight in the communication services, consumer discretionary, and information technology sectors of the S&P 500. When you aggregate the Magnificent Seven stocks into a composite, you can see that the equal-weighted average company in the Magnificent Seven returned over 76% last year. And when you plot that same equal-weighted cumulative total return against the remaining 493 stocks in the S&P 500, you will note that on the other side sits virtually everything else in the broader stock market. You see, a 76% return for the average Magnificent Seven stock is a stark contrast to the 16% return for the average of the remaining 493 stocks in the S&P 500. If there's only one thing that you take away from this video, this is it. We view the other side of the pendulum trajectory as attractive from a valuation perspective. In other words, for a large portion of the market, we believe that current valuations present an attractive entry point for disciplined investors. The 2023 domination of the Magnificent Seven implies that there are only 7 growth stories in the stock market, and our own research indicates that this is just not the case. At Pacific Point Advisors, we continually monitor the stock market, searching for companies that meet our proprietary earnings stability and growth qualifications. One could expect the outperformance of the Magnificent Seven if there were a limited number of growth stories. But again, this isn't the case. There are presently 85 companies in the stock market that meet our proprietary earnings stability and earnings growth qualifications. Only 3 of the Magnificent Seven even met our earnings stability and earnings growth qualifications throughout all of 2023. Hardly a unique or magnificent story. This indicates that there's nothing special about the Magnificent Seven, and that their 2023 outperformance was most likely being fueled by speculation and not by fundamentals. All of this market speculation is driving volatility as well. At the end of 2022, the information technology sector represented only 22% of the weight of the S&P 500, and by the end of 2023, the information technology sector rose to 29% of the weight of the S&P 500. Again, driven primarily by members of the Magnificent Seven. The result of this concentration can be witnessed in the extreme volatility of the S&P 500 from 2022 to 2023. In 2022, the S&P 500 was down 18.5% and experienced a max drawdown of more than 24% on several occasions. The black line in the following chart illustrates that in 2023, the S&P 500 rebounded over 25%, and this again was driven primarily from speculation in the Magnificent Seven stocks, illustrated by the blue line. We think investors' rush to risk and concentration in the Magnificent Seven stocks calls for continued diversification with a core equity allocation of quality growth and quality defensive stocks that exhibit superior capital efficiency and earnings stability through any economic environment. Our stable earnings core equity portfolios continue to provide this diversification. Our stable earnings performance lagged in 2023, much like the rest of the stock market outside of the Magnificent Seven. The stable earnings portfolios are not momentum strategies, making market timing bets on technology stocks. The stable earnings portfolios are managed to help investors achieve attractive equity market returns over the long term, with significantly lower overall volatility, drawdown, and subsequently lower overall risk. In 2022, our flagship stable earnings core portfolio outperformed the S&P 500 by a wide margin. In 2023, the Magnificent Seven stocks drove the S&P 500 to a volatile comeback. You can witness our lower volatility, lower risk advantages by simply combining the previous 2 years' cumulative returns for the stable earnings core portfolio. From inception on January 6th of 2022 through year end of 2023, our stable earnings core portfolio experienced a cumulative net total return of 8.54%, while the S&P 500 returned only 3.92%. Simply stated, stable earnings portfolios offer superior risk-adjusted returns over the long term, without the concentration risk and associated volatility of the information technology sector or the likes of the Magnificent Seven stocks. Just as no one could predict when the dot-com bubble would burst, no one today can predict exactly when the pendulum trajectory will return the information technology sector and the Magnificent Seven stocks back to equilibrium. But it's exactly that uncertainty that calls for the Pacific Point stable earnings portfolios to be at the core of your equity allocation. The stable earnings portfolio management discipline remains consistently applied for over 25 years. And today, 23 years after the dot-com implosion, we are rolling into 2024 with relative valuations for stable earnings portfolios that are as attractive as we have seen since the dot-com era. Thank you for your continued confidence in Pacific Point. And from all of us at Pacific Point, we wish you a happy, healthy, and prosperous 2024.